Hi, I'm Randy Efron, and in this episode, I'm going to talk about Bspra for HUD 221-D4 loans. Bspra is an acronym for Builder, Sponsor, Profit, and Risk Allowance. Bspra is the theoretical profit that a builder charges on a project, which according to HUD equals 10% of hard and soft construction costs. HUD allows this paper profit to be added to the cost of a project, which then increases the effective leverage of the loan. Note that HUD does not permit traditional developer fees on market rate deals, and therefore Bspra is viewed as an alternative to such. However, unlike a developer fee that is paid in cash, the Bspra is not paid in cash, but rather included as a mortgageable cost, which again increases the effective leverage of the HUD loan. Let me give you an example. Let's assume that a project actually costs $100, inclusive of $60 of hard and soft construction costs. That means that the borrower literally has to pay people $100 to complete the project. Let's further assume that HUD is willing to finance 85% of the project cost, which means that HUD will give the borrower $85. The borrower is then responsible for funding the remaining 15% of the project cost with cash. In this example, the cash contribution would equal $15. Now, if we take the same example, but assume that Bspra is permitted, what happens? Well, the actual project cost remains the same at $100, and the hard and soft construction cost of $60 also stays the same. However, HUD allows the borrower to calculate Bspra in an amount equal to 10% of hard and soft costs. Therefore, in this example, Bspra would equal $6. Since the project cost is increased by the Bspra, the total project cost is now $106 rather than $100. Since HUD is willing to finance 85% of the project cost, that means that HUD will give the borrower $90, and the borrower must now come to the table with $10 of cash rather than the $15 of cash in our original example. Now remember, the actual cost to build the project is still $100 since Bspra is only a paper cost. Therefore, the revised HUD loan of $90 actually equals 90% of the actual project cost. Now, it's important to note the following. A developer can only include Bspra in the project cost if the developer has an identity of interest with the general contractor. HUD has a pretty lengthy definition of what identity of interest means. In short, it means that the developer and the contractor need to have some sort of partnership or financial arrangement outside of the construction contract for the subject property. In cases where an identity of interest does not already exist, the most common way of establishing one is to give the contractor or one of its principals a non-controlling minority interest in the property ownership entity. Please note that when Bspra is used, no builder's profit can be included in the construction contract. It's one or the other. However, developers can still pay their contractors their profit from cash other than loan proceeds. Some of HUD's qualifications for contractors are: 1. The GC should have experience successfully building projects of similar size and scope to the subject property that's being built. Number 2, the GC should have working capital equal to 5% or more of the estimated construction contract for the subject property plus all other projects under construction. Number 3, the GC must be bondable. While this episode was not meant to be all-encompassing, hopefully it gave you a good overview of what Bspra is. Thanks for joining.